Welcome back again. We're going to be talking about why you should be journaling your missed trades, especially if they're in sessions that you would normally trade, and also setups that fit your plan entirely, and obviously on the pairs that you're trading. So I'm going to show you both an example from previous times where I used to use Notion as a journal, which is one of my previous videos, and also we're going to be looking at the new journaling system that I use, which is TradeZella, and how they record, or how I record, missed trades on their platform, which I think is fantastic. So jumping into Notion, straight back to the September from the previous video, I mentioned the white boxes are what were previously missed trades. You can see with 0%. So if we just use this one, September the 9th, for example, we can see it was long during New York and it was at 1600 hours, which is my time, UK time. So about 11 a.m. New York time. If we jump onto the actual screenshot itself, we can see my checklist that I mentioned before that I started doing in discount, below New York midnight open price, below weekly open, broken hand yesterday. If you watch ICT, this probably rings bells, right? Then I also go into what happened. So I explained the story that the candles were telling and where my entry was on what time frame, and then what I was targeting and how I would have trailed my SL. So this is absolutely vital, because despite me being there at the charts and trading this session, I believe I was trading this session. If not, if I was trading this session, this is what I would have taken. You're training yourself and your eyes to see the patterns over and over again and see, okay, yeah, I would have taken that at that time because XYZ. And I list XYZ right there for me. This is going to be completely different for your own plan. But for me, it's very helpful to see what I was looking for, why it happened, and how it fit my plan. And you can see I put it on the 5-minute time frame on this picture. And if we go to the other picture, we can see on the 1 minute as well, where I would have taken my entry. As you can see, entry in a 1 minute, FEG, which was down here, and you would have seen profit there. There's also a Fibonacci on there, but that's my plan, and that's how sometimes it works. So overall, journaling that missed trade helps me understand in the future, okay, that's a nice pattern that I missed. How do I not miss that in the future? Okay, sweet. So now we're on TradeZella, in my opinion, the best platform. We can see here, this is actually a fresh trade from two weeks ago on EURUSD. Again, you can see the common trend, and there's a missed trade for 2,000. This is on a funded account as well. So why did I miss this trade? How did I miss it? The reason why I like this platform more than Notion is because it takes a lot of my time away, as in it helps me import all my trade data across onto the platform rather than me manually doing it. I have to obviously write up and take screenshots, which I think is good anyways. Like I said, you're putting the patterns back into your head. You're reiterating what you missed and how you missed it and how it fits your plan. So for me, I'm on the missed trade section, and I've imported this missed trade manually as well. And you put your profit and stop loss, and you can do your little setups and mistakes and current actions and feelings and all that good stuff. But for me, I have a playbook that I've set up, and it's called 1 minute fair value gap. And on this chart alone, you can see where you would have entered and where you would have exited. And I was risking $500. You can see planned RR 4-1. Entry time, exit time, all that good stuff. So now I'm going to take you to my actual write-up for this trade. Cool. So we're on the trade that we missed, and I'm tagged it with missed trade. So originally I was looking for these sells until Trump tariff news came out, which created a strange wick to the downside. This threw me off, and thus I stopped looking at the charts / looking to adapt bias potentially equals mistake. Price then swept a 15-minute, 5-minute swing high while creating multiple wick rejections on 15, closed below 5-minute swing low, and on 5-minute and 1 minute, which created a 1-minute FEG to continue pushing down towards a 1 hour and 15-minute swing low, creating low of the day during post-NY lunch. Remember, common to see pullbacks during New York lunch, which is exactly what happened. Trust your bias once the news has been priced in. If more major, then we would have seen a bigger move. And then I also list that checklist that you remember seeing on Notion as well, right there below. And to accompany it, we have screenshots on the 15-minute with obviously drawings and labels, on the 5-minute, and also on the 1 minute, because we actually would have entered on the 1 minute. And then you can also see DXY, because you should be trading a dollar pair without DXY. So this is vital for me, because every time you or I or anyone writes down something, whether it's physically or typing it, you're reiterating again into your head, okay, this is the pattern I should have been seeing, or this is the pattern I should be memorizing. How come I missed it? Let me look at it again and again and again. And the more you look at it, the more you become confident with it. It's the same with anything, like riding a bike, like learning to drive a car. The more you do it, the more it becomes second nature. For example, the best example I can give is if you do drive, when you go driving now, if you've been driving for a couple of years, do you really think about driving your normal journeys, or do you tune out? Your brain will naturally tune out and start to think of other things because it doesn't need to fully focus on what's going on anymore. It's so second nature that, yep, you need to shift here, shift that gear, pedal, brake, go this way, go that way. You don't even have to think of where you're going. You just know it off by heart. It's the same with trading. The more confident you get, the more it becomes second nature. It's an intuition. So you learn when market's going to move, why market's going to move, how it's going to move by journaling. You journal what's happened, why it's happened, and you keep doing that over and over again. And guess what happens? It clicks in your head. You're like, oh yeah, this is going to happen at this time because that's what usually happens. Of course, no plan is ever 100%, but journaling your plan and making sure you tweak it to find that win rate percentage that you're looking for, whether it's 60, 50, 40, 70%, this will be the key ingredient for you. And what you're missing is this journaling. And so with me being able to journal this with the pictures and understanding, okay, yep, there was a lot of Trump news again with tariffs, etc. on the 26th of March. I remember this one. And that move came down and threw me off. But remember, for me, it was, okay, news is a very one-sided quick event, right? It's very volatile. It gets priced in and priced out. And what happened was the move got priced in, went back to where price was already going to retrace to, and then came back down to the original move. So overall, if I keep journaling, if you keep journaling, you'll keep reiterating again and again and again that this is what you're looking for, this is why you're looking for it, and you'll start to succeed in trading and become consistent and profitable with your journals. If you only give yourself 50% in your journal, and I didn't write all this stuff, even if it's a missed trade, there's no money on the line here. I didn't make or lose money, but the fact that I put this effort in, journaled it, and looked over it over the end of the week is what made me succeed, or is making me succeed going forward. We'll see you guys in the next one.